Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm John Darcy, Editor-in-Chief, and together we bring you the Morning Call. So Scott, this morning we're seeing some green arrows around the world after we got some weakness last week. What are you seeing? Is this just the new normal of volatility that we're seeing, or is this digestive construction? What are we seeing in world markets right now?
Well, we've been looking at the world markets lately to get a little bit of advice on how to handle ours. And then last week you had the Nikkei had an outside day on Tuesday, which led to a bigger decline on Thursday. The Shanghai had a little weakness, but our markets didn't get affected. We closed at all-time highs, so maybe we kind of knew that they would take it in stride, and then all of a sudden you get green arrows around the world, and the Nikkei snaps back 2.2%. But you look at the chart of the EWJ, and again, a lot of people gave me a little crap because I was talking about potentially new highs here in the Nikkei, which we were stone throw away from. We just didn't have enough juice there. If you take a closer look here, we are still in the top end of the range. Today we're probably filling this gap. You have your low, a higher low, another higher low. So things I think the bulls just happen to get a little bit spoiled at times. But overall, the trend around the world and the trend in our markets have been to the upside. You just have to pick and choose your spots when you want to, be in a bigger tier or take a little bit more action.
And then last week, U.S. markets shrugged off that weakness in world markets for the most part, broke above 1759, made new all-time highs. This morning, futures are up a few handles. With the debt ceiling situation out of the way, there doesn't seem much in the way of the market rallying through the end of the year, and earnings have been sort of an impetus for recent strength. Do you think that's something that's going to continue?
Yeah, and you saw that last week because on Thursday you had Amazon and you had Microsoft, and that helped bring us to those new highs. And if you look at the trend of the S&P, you'll see that again the trend has been strong. This is when the trend started in November. Okay, you had a higher low, trended all the way up. And then if you want to look closely on like what we do here professionally at T3 is we try and create alpha within the trends. So here on that May 22nd, you had an outside day. That led to a move all the way down to the 100-day, about 5%. Then you had a fast and furious rally to new highs. Then you had a bit of a breakout failure here. And then you had that head and shoulders top, led to a move to the downside again. And then this time we broke out above the prior high, failed, wound up getting corrective activity before 2 weeks ago, the red dog reversal, the pone moved to the upside. And then here we were like, okay, what happens next? Do we retest 1729 and do some type of corrective activity or hold higher? So all we did here is test the 8-day. We tested the 8-day. We put a low in at 1740, closed on the highs. So at this point, the trend has been strong. There's a lot of people underinvested in the market, a lot of fund managers that they're definitely going to have to play some type of catch-up at some point. So 1759 is now pivot resistance. So if we hold and close above this, again, this pain trade to the upside, the speed will remain intact. If we open above, come back below, then all of a sudden you have to see how we handle the 8-day. But overall, lots of, I would say lots of good action. I don't think you have to be all in at these upper levels, but those with short in the brain, they're definitely missing out, and they're probably a bit more frustrated than someone else.
So this week we have a heavy week of economic data, and we also have earnings season. The meat of earnings season is still going on right now. But let's revisit a few stocks, Scott, in our sector spotlight in tech that I've already reported earnings that provided some of the impetus that you mentioned earlier for those new all-time highs in the market. You can go ahead and start with Amazon, which this time had another decent report. Wall Street loves it, thinks that it's going to continue to grow, multiple growth for Amazon. Is this one that you think can continue higher?
Well, remember last time on the earnings, it pretty much squeezed all the way into the close, and then it just it went out of favor, and it was a frustrating trade before going back to new highs. So what we know now is, we have a big gap here. So this is how we measure it. Okay, first of all, if you remember over the summer, this had a really nice setup when it broke above 280. Then this was the last quarter when it closed in the highs, and then just and then people just found other things to do, and it grinded all the way back to retest it. And then PS, here we are now. So I would write down 352.60. See if we could digest above this gap and then reset up for another trade to the upside above Friday's high. So if we take out Friday's high today, anyone caught short, because there are a lot of shorts in Amazon because everyone believes that the valuation is too high, the P is too high, but meanwhile, if you've owned Amazon for multiple years as a stock picker, you've been rewarded. So anyway, as a trader, I'm going to see how we digest above this area, let a few sessions go by, and then figure out another way to get involved.
And then Microsoft is an interesting case. It reported strong earnings. It's been through sort of a roller coaster ride. Steve Ballmer announced that he was stepping down. The stock ignited on that news, and then they announced that big write-down of their Surface tablets that weren't selling. So it came back down, but it's a stock that does have a decent dividend yield. They do have a lot of cash on hand. Some people think the potential leadership change could sparked the stock. Is this something that you're interested in trading to the long side?
Not at this point. There's been some points in Microsoft when it's tight and it can go. The earnings were good. I guess looking at the chart, you'll see here, this was the gap up right there. It held where it had to, I guess, on Friday. No real follow through. I would write down 35.47. If it were to hold above 35.47 for a few sessions, maybe there's another trade above this 36.29. But ultimately, I just feel like it's slow, and it does give you a yield if it's an investment in your portfolio. Just be light there and don't expect too much. And if it does trade through this pivot, there is a chance it could see 38 this year.
All right, and Google is one that, if you're on the virtual trading floor, you saw Scott take a call spread into it, which Google ended up exceeding all of those expectations and putting in a big move. Then it accelerated again last week above pivots. Is this something that will continue to be on your radar?
First of all, it was the first time I took calls, not a call
spread.
I'm
sorry.
Yeah, everyone's like, Red Dog, you're too conservative. This one, I'm like, this one had to set up. It was for 7 months. It was in a base. So I thought, why cap it? Yeah, after hours, I think I shorted half as a hedge and then held half. But ultimately, there are different ways to play stocks into earnings. And if you look at the Google setup, it was set up really nice because here's where it was. You had 7 months of sideways activity of institutions probably accumulating, going through different hands, getting into a better, spot, so to speak. So for this, I'm like, let me do a call, calls because, if it goes, I don't want to be that limited. So here it went, closing the highs. You just talked about another setup that there was right there, which was right here. Nice little trade above 1,019. And then it hit 1,040. Gave you a small Red Dog reversal, some downside follow through on Friday, but still holding up well. I'd give this some space. I don't see a great setup here. I'm in a call spread now because I bought some calls, sold some, then I also sold some 1,040. So I'm going to just sit with it. I think it will reset up. So far it looks good, but as we talk about Apple that's coming out, you have to do a different type of strategy because it's already had a move.
Yeah, like you said, Apple has rallied into earnings, perhaps reflecting that people have some decent expectations for this report. So like you said, maybe take a little bit of different approach with it. People are expecting 7 and change in terms of their EPS. Are you going to be looking for a big beat on that? Are you going to be looking for guidance in that report? What's going to? I know you're looking for a strategy prior to the report, but what are you going to be looking for in that report?
Well, this time I'm going to try and take some kind of option strategy and probably do a call spread because, like you said, it's already had a big move. So sometimes you could be right on direction and wrong on your strategy because of the premiums that are in those options. And if you look here at the chart of Apple, you'll see, first of all, remember this. This was that little head and shoulders top back at 700 when it broke 650 and then it broke the trend line. So fast forward to where we are here. I remember last quarter was actually, it's been a nice run for Apple. The last quarter, remember this, it doesn't look like much, but right here you had your gap up, it held, went sideways, and boom. Okay, then it came back, retested, and gave us another nice trade that we were looking at right around that, 483. I think we had it in off the charts or something like that.
We did.
Right around 493, actually.
Out of that wedge.
Right, so sometimes it's calculated, and sometimes it's just on the move. So if you look here, even if they have a great report, some of it could be priced in. So what I'm going to look to do, because options are usually high, is if you look back here, there's a gap that can get filled, to 541. And then you have right here, this is 555. So what I think would make sense if you want to have some kind of actionable options, last week's peak was 532. So maybe if you bought the 530s and sold the 540s or 545s, you could help finance your purchase and be involved if it is a strong report and they don't try and sandbag guidance too much, which I don't think they will. You could get a move to 540 to 550. So if you have that kind of call spread, it's not going to be like a Google that could be 7-8 times, but it could be 2 to 3 times your money. And at least with with Apple and options, risk is premium paid into earnings versus unlimited risk.
What do you think the possibility of that they listen to Uncle Carl and do a big share buyback this report?
Then I'll be crying that I have a call spread and it'll be 575 and I'll be like, oh, Red Dog did it again, but at least it's consistency and there's a process. But overall, if you're thinking that too, so maybe what you could do is what has been discussed in the VTF even this morning, do a call spread with the weeklies on Friday, and then if you think that once this is out of the way that it's going to have a good fourth quarter run, go and buy like the December 560s if you think it's going to be a $575 or $600 stock come year end, which if we get away from this quarter and they come out and their quarter's strong and their guidance is okay with the products and Christmas season, maybe a watch and maybe TV and maybe China Mobile, you could do 2 different plays, a cash flow play and then something a little bit longer term.
And then the social media twins are reporting earnings soon. LinkedIn is reporting after the close on Tuesday. It's been one that's been hanging towards upper levels, but also showing a little bit of relative weakness at spots over the last few weeks. Is this one you're going to be looking to play at all, Scott?
You know, this one I might have avoid. You know, I've played LinkedIn so many times when I thought it was really compelling because those premiums are high. You know, so if you remember, you know, way back when we had this cup and handle pattern, I'll just take a look at the weekly on LinkedIn. You'll see right around here. You know, I remember taking options into this because you had the ultimate setup. Right here is your cup. There's your handle, and it was a horizontal handle, and I think we took some kind of, I did a call spread here where I was upset about, because this I should have been a little smarter and said, okay, look how tight this is, have some, it was worthy of a play, but, I capped it. So then it happened again right here after a nice sideways consolidation. Now, it's getting a little loose and wide up here. So for me, I think, if you're in this stock for the last, I don't know, year or so, and you have a double or triple, maybe do a collar. Okay, which means you sell some calls to buy some puts, and then you can keep your stock just in case. If you're looking for a straight out play, here's your pivot resistance, okay, which is between 253 and 257. So if you're thinking that it's going to go to 280 to 300, maybe you buy the 250s and sell the 280s or something like that. I might just trade this one after hours tomorrow, or I'll revisit tomorrow. I'm not exactly sure. I'll see how I do with Apple tonight, perhaps. See if I have some money to work with.
Yeah. And then Facebook dropped about 1% on Friday. It's one that has remained generally strong. I'm not sure the exact earnings date, but it's just one that you're
Wednesday.
It's Wednesday. One that you're going to continue to trade.
Yeah, this one, remember the lucky one, I had a call spread, and by accident I only covered a portion of it. But anyway, this was another.
Should have heard Scott on the trading floor that day. He goes home, he's cursing his luck. He says, "Oh, I got a call spread. I always limit my gains." And he walks into his computer and he's got straight calls, and everybody on the trading floor heard his excitement. So
that wasn't that exciting. A little excited, a little bit. Well, anyway, that setup was very compelling, and now it's had such a big move that even if it does beat, I'm wondering what kind of upside it could have. Some of it could be priced in. Ultimately, you look at the chart here of Facebook, you'll see here is this cup and handle pattern where it took a little bit longer to work out because they needed to prove that they could monetize mobile. And here it is, there's your cup, there's your handle. So this was a nice option strategy into earnings. Then even after, it was really tradable. You take a close look here, and you could see how many different times it's set up. Here is when it took out that earnings high and continued. Then another buyable spot, and then I think we actually even caught a cute short, the last few sessions. Then I was long Thursday, I was traveling Friday, got stopped out, so I have no Facebook position. If before Wednesday it happens to grind lower towards 50, maybe what I'll do is I'll take a small call spread where I'll buy the 50s and then maybe sell the 55s to finance it. But at this point, it's had such a big run. Even if they do beat, I'm wondering how much upside's left. I think they keep it in the game just because they want to get a nice run for Twitter. So they don't want to be all of a sudden crushing Facebook ahead of Twitter and ruin all that halo effect for that new issue that I think comes out in the next 2 weeks.
And one thing last week that came out is that with Twitter, they're going a little bit conservative with the pricing on the IPO. They're pricing an $11 billion valuation. Not a ton of shares. It's a type of thing where I think they're very wary of what happened with Facebook, and they want to let the market dictate the potential run up in Twitter rather than creating a situation where it could go through a tough first year or so like Facebook did.
Well, that's we talk about the art of the first day of the IPO, which we'll get into later this week, where we talk about how we can measure supply and demand on the first day to give any kind of clues on whether or not it'll be a nice trade for those 3 days, or if the investment bankers didn't do a good job, priced it wrong, we're a little bit piggies, and that's what happened with Facebook. So with Twitter, I love the fact that they're going conservative. I hope that they don't take the option of putting more shares out there the last day, so at least the supply and demand could be tight, and then we get a nice trade, and then a few trade, a little bit of follow through, and then the real key will be the setup that takes place in the first 4 to 6 weeks, sometimes for a bigger trade for a little bit of a longer term situation.
All right, we'll take a quick commercial break before we go in the trenches with some precious metals.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Welcome back, everyone. We're going to go in the trenches. It won't be a real long segment because there's not too much to say besides the fact that the precious metals are starting to perk up a little bit. And what we're going to examine is whether or not this is an opportunity that is worth your attention, or it's simply a short-term transitory type situation. GLD broke above its 50-day on Friday with about a 0.4% gain, looking a little bit better. And you talk about market sentiment, things were so negative on gold and the precious metals. People were talking about major support levels and areas that they could see it going down to, and maybe the contrarian trade sort of came into play with gold.
Well, that was I think in June, the blood in the street lows. Now the question is, was that just a reflex move? So real quickly, just look at the chart here of the GLDs, and you will see here is that high, here is that wedge that took place where you had to make some quick decisions around 160. Then this is where that 150 or 49 area when major support broke, and now you take a close look here, and some would be saying that this is a bit of an inverted head and shoulders pattern. Left shoulder, head, right shoulder. So far it's acting better. Okay, it's holding gaps, has some pressure to the upside. I'd say it has to stay above 128 to stay relative. And in order for it to get some power, it's going to have to cross above this 130.92. But extend, like ignite, not just this small little do-do-do-do-do-do-do. It needs to wake people up, squeeze some shorts, and let people know that gold's here for a while, which, it's looking like it could be here a little bit longer, just not sure how long.
The gold miners ETF has actually been, at times, showing leadership to the underlying metal. And it's something that perhaps could look a little bit more compelling. What are you seeing on the chart of the GDX?
Not much, and I was looking at the GDX to see whether or not, it is leading gold and is telling us a story that that gold could be the place to be for the fourth quarter. I think you could have some exposure, but not just that. You look at the miners here, and you will see that, it's been trending to the downside, and it's been really horrendous for guys involved. So here's your high, they looked pretty good here, and they got contained, then it broke support, and now look where it is down there. So there is like this lower channel developing. And if you look here, you will see that it broke. First of all, this is when it had that really nice move back in June, okay, and then it came back to resistance and failed. And then it broke this downtrend with a gap, and it's kind of holding in there. So I would say as long as it stays above 25, perhaps stay with the miners, and then in order for it to get a little bit better, it's got to trade above Friday's high of 26.45. But ultimately, in the scheme of things, it's really nowhere. This is, to me, just a trade, and if you could make money back to 30, congratulations, and then right there, we'll see what's next here. But overall, a little commitment, don't get excited, but some things to do.
And people often lump gold and silver in the same category, but they've actually been showing some divergences recently, and on Friday, silver was actually very weak when gold posted a gain. Is this something that maybe you look for a little arbitrage type trade here, a little pairs trade, or are you just sort of ignoring silver?
So this one, I don't think, it's so hard to get gains out of metal, so to be like long gold and short silver, yeah. I think, if one's looking good, maybe the other one goes with it, and that's what's been happening since those lows. But I just still think there's non-believers out there. So, with silver, it's not like it's the currency trade. It's more like just a metal and some mining capabilities. But anyway, you look at silver and you will see that, this, remember we talked about perhaps buying the 17 3/4, 18 versus selling, and then you had a really nice move. And then this, you could say that it broke this downtrend right there. It's trying to hold above. So as long as it stays above 21.30, it looks okay. But it really has to start getting above this 22 with some kind of authority in order to retrace some of this down move. And it's been a heck of a down move. And there's a lot of memories here in silver where people have been hurt, battered, bruised. If that's not you, maybe there's an opportunity. But it's got to get above 22 and stay above 22 with some kind of volume.
All right, we'll move on to quick hits, and we'll start with a couple biotech names. BIIB is a stock that on Friday, it showed some relative strength with a 1.2% gain. Biotechs are the type of thing that can separate themselves a little bit from broader market action, so perhaps people that are worried about a potential market correction, whether or not those fears are founded, perhaps turn to the biotechs a little bit. And it's been a strong sector this year, had some pockets of relative weakness over the last few weeks during that market correction, but BIIB is the focus here. What do you see, Scott?
I'm going to keep it quick. This is a quick hit. Look at the chart. Look at the levels. It broke out. It's holding it. It's got to get above 253 in order to extend.
Alexion, ALXN, surged 15% last week after it reported good earnings results. What are you seeing there? Is this going to have an opportunity for a follow-through trade?
Well, this has 2 strong days, and it's probably up a little bit on day 3. I'm not a buyer on day 3. I'm usually a seller. If you caught this move, look at it here. That's why people love bios, because when they go, they can be potent. This was a little reversal here 3 days ago. You had some follow-through to the upside. This is when it broke above the prior level. So now I would just trim and trail it. I wouldn't chase it up here at 125.
XHB had a nice 3-day rally. It's one of those sort of defensive sectors that have benefited from the delay of QE tapering. Is this something that you think could continue to the upside? Well,
3 days ago we talked about, or sometime last week I said, you know what, in the fourth quarter I think the home builders and the utilities could outperform because they've been resting since their first quarter move, and both of them gave you a little bit of alpha last week, and that's what trading or traders are looking for. Good patterns that could outperform, because I'm pretty sure that the market's not going to be able to go up another 10% from here, so you have to find individual areas. And you look at the XHB, you'll see that in the first quarter, it had a really strong move to the upside before peaking out. And then as rates rose, this had to consolidate because they said that would hurt housing. And then you look closely here, talked about this right there. On this breakout is when it went on my virtual trade floor, and I still have it. So now let it digest above 31-ish. If it can stay above 31-ish, it should continue quicker. And if you look at the XLU real quick, because I'm just going to throw it in there, this was something we also talked about. If you look at price patterns and you saw this head and shoulders pattern come into fruition at the start of the year after a nice run, you got out of the way and then talked about how this downtrend could be an opportunity. That was above 39, and then here we are almost at highs of last week. So I think this is your next level here, but with rates staying lower probably till March, people need some kind of yield, so they went back to utilities. So that's how you put 1 + 1 together.
And finally, we've seen some of these basic material commodity type stocks be beaten down over the last few years, given the slack growth and slack demand in the global economy. But you're seeing names like Cliff Natural Resources had nice earnings last week, was up big. X U.S. Steel looking okay. FCX, a copper and gold miner company, looking okay. And off the charts, one of the focuses has been Walter Energy, WLT. Is this one that, it's a lower level pattern, is this one that you think could get some
Every time I buy that stock after it moves, it pulls in. One of these times I'm hoping it sticks. But you look at something like, just like you said with Freeport, I just want to show you how a trend could change. Look at this Freeport, look when this downtrend triggered, and went back to the upside. This was in a downtrend all year, so it broke above, retested. Now look where that is. So that shows you how you can get some kind of catch-up play. So again, you look at Walter, not quite the same, not the same quality, but sideways channel. A lot of people are shorted. It's got to get above 1630-ish and stay above it for like an hour. Then maybe you get some more upside. And then this last price point here is about $20. So that'd be a nice trade for the crew on the floor.
All right, well, that'll do it for today's morning call. Scott, I'll do what Brittany does every morning, ask you what your focus is going to be today in the session.
You know what, I come in pretty flat-footed, because up here I thought it could get a little wishy-washy, so I'm going to be very stock-specific. I'm going to try and stay with things that are working and then look for new opportunities. I'm going to see what happens with Apple today. I'm going to try and get into a call spread. You'll probably have to be on the virtual trade floor to find out when and where and how. And then I'm going to be very light on my feet. I think some people got short in the brain last week and they got squeezed out. And they missed good opportunities in a lot of the different earnings plays. We saw different types of earnings plays. You saw Netflix gap up huge to fail. You saw Google gap up and go. Then you saw Amazon pull in and then make highs. So just don't use one situation and judge it for the next. Every situation is usually independent of each other. So you have to watch that price action closely and make sure you know your time horizon, because if you fall in love with the long and then all of a sudden you hold it with the equity through earnings and it gets put in the penalty box, that might not be a time frame. Same way if you think a stock can't go higher anymore, and it's going to be like a Netflix a la Amazon, you can either get squeezed out, you might be still short, you might be thinking, what do I do here? So everything is just kind of different, and at this point, just continue to tack onto your month. There's a lot of good activity.
All right, thank you for joining us. We'll see you back here for the daily recap.